restaurant, churches.
Interesting.
Cemeteries is actually pretty interesting. Brothels is another interesting one. Lots of weird and fun stuff that comes past my desk. Melbourne, forget about it. Office vacancies up to 18%. The office market, overall, it's a market that's been doing it tough.
Yeah.
However, encouragingly, we're starting to see it tick up. We have this kind of housing supply issue. We have these vacant office buildings. Can't we just turn, which you can't. It's very, very hard. A lot of people think it's a really easy thing to do. The thing with pubs is it's quite a hard asset class to get into. It's very dominated by private families.
You can even get some large ticket sizes.
As much as 120 million, I think it is.
Welcome back to another episode of the Commercial Property Investing Show. And in today's episode, we catch up with Vanessa Rader again, a previous guest of ours who's gone through how different sectors are shuffling around Australia. But today, we actually go through some of the asset classes that aren't doing as well, where you'll get to understand which markets have it tough, why they have it tough, and the sectors that you need to be very mindful of when entering. Now, we go through the data of some niche industries like pubs and some other industries where you'll want to stay to the end to learn more about. Now, when it comes to the niche markets and the sectors that aren't doing as well, I feel as a commercial investor, you've got to know this, because if you don't, you'll constantly just focus on where everything is booming, but you'll never understand the why of where markets slow down. And getting this sort of research will help you level up as a commercial property investor. So let's jump right in. Vanessa, welcome back again to the Commercial Property Investing Show.
Thank you. Thanks for having me.
No, it's great to have you on here. And Vanessa, I know in your research, we love going into some of the state of the markets, like what's happening in different parts of the industries. And I think people don't give enough insights into some of the industries that maybe, or we don't talk about often in podcasts, that aren't showing the best signs and unpacking the whys or what's occurring. I'd love to understand some of the markets, in your opinion, across the industries where you're like, these industries aren't really showing some healthy signals.
Yeah, doing it tough at the moment. Number one up there would definitely be the office market. So as we know, during the COVID period, we had the work from home sort of mandate, and it's been really hard to get people to come back into the office.
Yeah.
That's not across the country. So Queensland doing pretty well, WA doing pretty well. They had kind of different lockdown. Melbourne, forget about it. Sorry,
Shocker,
any kind of
right?
Melbourne people watching or listening, it is an absolute terrible situation there. It's very quiet. Office vacancies are more up to 18%,
Wow.
which is a bit troubling if you're an asset owner. But yeah, the office market overall, in terms of returns, it's been kind of in negative territory for the last kind of 2 years now.
Yeah.
However, encouragingly, we're starting to see it tick up, albeit still in negative, but it's ticking up in the right direction rather than moving downwards. There has been really good take-up in a lot of our office markets, but it's been the better end of town. So there's this kind of flight to quality. I really don't like that term. It's kind of a pivot to premium even, because it's at the really high end of town. So really good quality, newer assets with really good end of trip facilities, have some kind of wellness features, have a lot of things to really draw their staff back into the office. And people are willing to take smaller footprints in these really premium assets. And as a result, it's been a little bit slow grind, but we are starting to see some improvements, particularly the prime end of the market. Overall though, it has been doing it tough. And if that part of the market's doing well, that's all well and good. But what happens to that older stock or the secondary assets? Because the tenants are moving out of there. That's a real concern when it comes to the office market.
Yeah.
Some markets are constrained though. Like we have spoken in the past about industrial land. There's only so much of it. But in the office market, it's very, very similar. Our CBD, look at Sydney, for example, where we've got the water on one side, water on the other side, park on the other. Like there's not much that we can really move. And with a high cost of construction, perhaps these secondary assets, the replacement cost is difficult, so perhaps there'll be something to do with them. But it's a market that's been doing it tough. It will continue to do it tough for a little while. It's just moving very, very slowly. But like any good property market, there is cycles. I have seen office vacancies in these on a similar sort of rates as in years gone by. But you can't help but think that there's been a structural shift in the occupiers. And working from home has certainly been, it's one of those things that looks like it's here to stay in some way, shape or form. And if you're in Melbourne, the Labor government want to put in a 2-day working from home, which will
was an interesting thing.
do even more to kind of hurt that market in particular.
I mean, as a result of that, have you seen the suburban versus CBD shifts be very two worlds apart in offices? Because I'm out here in Sydney, and I'm seeing a very different northwest of Sydney than I am the CBD, where some stuff in the northwest of Sydney in office world has been getting picked up pretty aggressively, as in it's competitive. What is your read on the office in suburban versus CBD?
Yeah, that's a really interesting question, because particularly during the COVID period, everyone kind of thought we were going to move to this hub and spoke type model. So you had your kind of major city, like spot, head office, if you like, and then you'd have these kind of like other little spots everywhere. And then those suburban markets were doing pretty well. People wanted to be close to home. They didn't want to have to catch transport, all that sort of stuff. I feel like in the last sort of 12 months, that's actually turned around a little bit. And I think that there is really good, because there's good incentives on offer to move to the CBD into these better quality buildings. People have been opting to come back into the city over staying in their suburban markets. So some suburban markets are doing it tough. And I point to probably Crows Nest and Leonards. That's actually got the highest vacancy in the entire country at the moment. It's 29.4%, I think it is.
Wow.
Which is, and there's beautiful buildings there. Like it's not as if, it's just and they've got the metro, they've got the train line. So it's all the things would be pointing to it doing it well.
It's almost like if you're there, you might as well be home. Is that going to be a part of it?
It could be. So look, I think it will come back, and Parramatta's another good example. Like Parramatta, that market historically has always done it kind of tough, but then they built those beautiful new buildings there in Parramatta Square. Occupancy really improved, but there's a lot of old crappy stuff there too.
Yes.
So, and there's not a lot of capex going into those buildings to bring them up to any sort of standard. So there's either going to be a really cheap option, because some people need affordability. Like everyone can't stay in these really super expensive places in town. There'll be an affordability play, but where people do need to occupy this space. But I think there will be definitely a two-tier market, but even within that two-tier market, it's kind of like another tier underneath that, which is that real gap between what an A grade or a high quality versus everything else.
Yeah.
There's still a lot of supply coming onto the market as well, isn't there? Like in terms of like the Sydney CBD, I still see office buildings getting built.
Yeah, there's a couple where we're coming to a bit of an end. Once kind of the metro and stuff goes on, there's a few more that are happening, but I think that's about it. It's very hard to justify building office buildings for a number of reasons. The cost of construction and the labour and the time scale now to build anything is so ridiculous that you need to achieve these economic rents that are far in excess of what we can comprehend as being, feasible. So I think that will have to just calm itself down. So once these projects that are kind of happening are done, there's nothing else that's going to be done for a little while unless you can kind of amalgamate sites in these secondary assets and do something with them. And that's similar across the board. Perth has been through a construction cycle that's coming to an end. There's another building finishing up in Brisbane, and once that's done, there's pretty much nothing on the horizon for a little while, and you'd be crazy to build anything in Melbourne.
Yeah, Melbourne's a whole, like I'm even seeing net yields of over 8% in some assets in Melbourne commercial CBD. It's wild.
Incentives are super high.
Like 80, 60%?
There is places in suburban Melbourne where they have signs up saying outgoings only. So they just want to cover their costs. And it's a hard time for owners if that's the case. So look, Melbourne's a tricky one, and it's different because it does have some of the taxation. The economy's doing it really tough there. Historically, though, Melbourne's been it's a robust economy. Historically, has been. We know the population growth is skewing back there.
Correct.
Affordable housing now, but it's much more affordable than other places.
I mean the net internal migration bleed has been reducing quarter on quarter for quite a bit now. Where it used to be a massive bleed.
Yes.
I mean, it's just gone from massive bleed to very little bleed. Yeah. And it'll be positive in no time if we start seeing that level of affordability, right?
Yeah, definitely. And so once we see that, there will be kind of a bit more momentum. But we need the government, though, to do more. And like I said, the whole work from home doesn't help the situation. Need to encourage a bit more productivity, more happening, activate that CBD again. But look, it will get there. It's just going to be a rough trough, I think. Just a bit of a prolonged period of time. But yeah, office market, still doing it a bit tough.
Now, I'm getting very futuristic here with the office question next, and this is the last one I have on offices, but overseas and in parts of the States, actually, we've seen some of the offices almost have you have the inner west of Sydney where you've got industrials that had the loft apartments or the lofty, buildings and homes, and they're your ex-industrial places, now some fancy properties. Do you ever see a world where offices start to get this repurposing into part residential again? We have a whole
I'm
floor.
feeling WeWork here.
Yeah. I'm thinking like...
Did we not learn anything from that?
Yeah. I get the whole WeWork with the whole commercial side in terms of the short-term stuff, but I'm talking like residentials coming back into some cool office buildings, maybe
built to rent,
gyms and built BTR.
I think that a lot of people just do look at that and go, look, we have this kind of housing supply issue across the country. We have these vacant office buildings. Can't we just turn, which you can't. It's very, very hard. A lot of people think it's a really easy thing to do. They're usually, firstly, the servicing is not there. Like, it's very different to have, a bath, 5 baths or 6 baths on a level and toilets and things. Whereas in the past there has only been 3 toilets or 6 toilets on a floor. Yeah. The engineering to allow that to happen and all the servicing, it becomes nearly cost prohibitive, and yet kind of better off
New York style. Let's get communal. The New York bathrooms.
We work, we live.
Yeah, we live.
So look, I think that it's probably better. There'll be better types of uses. Like, I think uses like this, like a studio space, we're getting more of more people are doing filming for small business, big business. They don't want to have it in-house. So green rooms, podcast studios, that sort of media component, I think, goes into a lot of this space. We're seeing more and more of it. So there might be that sort of use. Gyms has been one that we have seen happen. And we continue to get more gyms. There's a gym on every corner, but they seem to be still doing well, so that's really great. But no, I don't think the residential necessarily will live. I think build to rent is a completely different, kettle of fish. But one of the things we have seen in Perth, an example where student accommodation has managed to go in there, because they do have the communal bathrooms and that sort of thing.
Yes.
And much smaller, you don't need to have basement parking and things like that, because they don't necessarily need that. So what there is, kind of the existing structure is somewhat okay, and it's usually short-term kind of, you only need a small little box, a lot of these places are. So that may be, but not resi in office.
Loving the show and keen to invest? Well, book your free discovery call and we'll actually walk you through how to build a high growth portfolio without all the guesswork. Just jump onto the link in the show notes or visit investorkit.com.au to book your discovery call. And now let's get back into the show.
So in the previous episode, we spoke about retail, we spoke about industrial, being a safe bet still in our office, still trying to recover. Can we go into some niche asset classes? And, Arjun and I love going to the pub sometimes and having a schnitty. I'm sure you do as well, Vanessa.
Yeah.
Can we talk about maybe pubs, clubs, hotels?
Yeah, pubs is a really, really interesting asset class. I love pubs. Pubs is it's a very big asset class, particularly here in New South Wales. Volumes are reasonably high. The thing with pubs is it's quite a hard asset class to kind of get into. It's very dominated by private families that own quite a portfolio, and they do kind of share and move things around, just like the Westfields would in when you're talking about kind of big retail centres. But the pub market's doing pretty well. It's obviously very, every state has different regulations. So there's a lot of regulation around smoking, about gaming as well. The gaming component is quite attractive. We've seen poker machine entitlements increase in value quite considerably because there's only so many that you can have. They don't keep on increasing. There's only so many that are available and they can be moved around. So pubs is an interesting one. We're seeing pubs being a bit more sophisticated. So that kind of snitty that you're getting was probably a bit more dodgy looking, say 10 years ago than to what it is now. And the price tag probably reflects that as well. So I think that we're seeing pubs moving away from being traditional drinking and gaming type venues. They're facilities that have really good food and family friendly.
Lots of family, like family parks and like playgrounds and live music. The Vineyard Hotel near where I am in the northwest up there in Pitt Town, and it's beautiful. They've got these like mist machines where like kids are running around and a little cold mist. It's cool. Yeah,
so there's been a real transformation in what a pub is, and they do offer, but the good thing with that is they offer various lines of income streams. So they have the food and beverage, they have the gaming, they have like if they have a bottle shop or something on site, so they have a retail component as well. A lot of them still do have like accommodation up top. So there's a lot of ways that you can kind of earn income from a pub. If one thing isn't off, you have the ability to kind of transition and get money from elsewhere.
The raffles. No.
The meat raffles.
Meat trade.
You're amongst that, aren't you?
But the other thing,
anything competition, I'm just like I'm in
But
there.
the other thing with a lot of the pubs, if you think about it, the pubs are usually within the centre of our communities. So if you look at kind of your local street or local high street, there's usually a pub on some corner somewhere. So at the end of the day, that's a really valuable piece of property.
True.
Yeah.
Even if its use as a pub kind of changes, and again, like if that's a residential, there's the air rights use above them to build kind of residential and stuff. There's a lot to be said about pubs. They're just much cooler and funkier than they ever used to be.
Yeah, there's a scarcity element to them as well, right? Like
Yeah.
a McDonald's in every suburb, there's a pub probably in every suburb too. In terms of cap rates, what do you see pubs transact on that scale?
There's the real range. A lot of them are just leasehold, and there's some that are obviously freehold, but they can be anywhere between 6 to 9% if you're in a regional area versus kind of like a metro location. The operator is super key. Like you can see, some what the good ones are and ones that aren't. So that food and beverage is super important. Be able to create that kind of family atmosphere we can see is something that's far more attractive than just a real boozer that has a fight out the front. Or do you know what I mean? Like
front of a courthouse.
Like that's that's different. We saw that one not long ago. But yeah, so it's an interesting asset class. It's a really cool one and the people that are involved with it, they're all kind of fun. Those hospitality people, well, obviously they'll be fun, but they're all very wealthy in their own right. And there's an awful lot of family and generational wealth. So the issue with pubs though is volumes usually aren't particularly high because they are tightly held, and it's usually you kind of waiting for the family to die off a little bit for it to kind
It's
of
quite
move.
generational,
It's
right?
super generational.
And you can even get some large ticket sizes. Like some of them are in the tens and tens of
yeah.
millions of dollars in deals, and they're not cheap at all.
Oh,
and
no.
Their
We've-
cap rates come right down there.
In the past, I remember we sold one for about 80 million, and that was kind of like the landmark. But then one, like only not long after that sold, they have gone to as much as 120 million. I think it is the one out in
Byron Bay ones?
out in Casula, super big
Right.
land parcel.
Oh,
and
Crossroads.
Stuff too. Crossroads, that's it.
Yeah.
yeah.
It's a lot of money.
That's a huge corner pub though.
But that's
It's
what I mean.
massive.
There's so many. There's other property plays when it comes to that as well. But it's the gaming in that
That's
one in
right.
particular. is
There's like
quite
100
attractive.
pokies in there. Yeah.
Well, that gaming entitlement can't be underestimated. It's kind of it's like 4x its price in the last kind of 2 years,
Wow.
and
So-
there's not more coming. So
Absolutely. Now, that's niche on the big scale of things. Have you had some research done on any unique little niche
weird
industries?
things. Oh, there's so many weird things.
Yeah.
There's lots
Far
of
away.
Yeah. Okay. Well, we can talk like churches. Is an interesting
Okay,
one. Churches,
interesting.
cemeteries. Cemeteries is actually pretty interesting. There's a lot of kind of record keeping required when it comes to kind of cemeteries. So a lot of people will be kind of weirded out by that. They don't want to touch that. But churches, you've probably seen a lot of kind of churches have been repositioned into kind of residential or retail, and they've got really kind of funky architecture or something. So that's a lot of people do like that. They like that kind of unique architecture. That's usually with churches. Brothels is another interesting one. We do see quite a few brothels do sell. Like they're an asset class that has, as long as there's a good business attached to it, I suppose, but
Brings in income.
it brings an income.
The due diligence on that.
You have to go view
Sorry,
the property.
I had to say that.
So like that's not for everybody. It's to some people it's a bit icky, I suppose. But if they're usually in well located places, you probably don't even know they're there, and as long as there's all the planning and stuff involved with that. But it's certainly an asset class that people do like to pick up. They often have a higher yield as well because they're obviously not so attractive to a lot of people. But yeah, that's a bit of an interesting one. There's like lots of weird and fun stuff that comes past my desk.
Well, I love the whole state of the market because it's never just one market. There's all these little markets. There's larger industries, the different divides there.
Service stations, that's another.
Absolutely right. So, I mean, thank you so much, Vanessa, just jumping on to share more about the states of what's happening. And it was really interesting to just dive into the offices because I think hearing the other side of not just talking about what's booming and growing, but where opportunities may lie or where risks and concerns are, it's always just good to share that to the audience. So thank you so much again.
Yeah, thank you.
Thank you, Vanessa.
Awesome.